Good morning, guys. All right. Bitcoin was on a run. May have possibly got a range extension. Yeah, we got a range extension. Interesting. What's up? Got some people here. Good morning, Noah. How you doing, man? What's up? Just PG eaters. David, you made it. Nice. What's up, man? Anon, how you doing? From Twitter. Pure market can't make up his mind. Oh, well, there was a couple of really transparent moves that happened, but both those moves were happening while either A, you were asleep or busy, man. Being a pain in the butt when it comes to its timing lately. You're half asleep, but you're here. I'm half asleep too, man. I had a terrible sleep last night. All right. Well, let's get into it. I've got until about 9:30, and then I gotta do a call with the community. Hopefully, something sets itself up for that call, so we can take a trade together. But yeah, Moo, how you doing, man? Welcome to the party. But yeah, okay, so let's get into it. So we had a little bit of awkward price action through like this journey right here. Well, I guess I can include all of this. We eventually end up using the valley area as resistance, telling us that we're going to move to the next valley area, which is right here. And when we got there, I was expecting like a full rotation down to its valley area low, but we actually ended up using the point of control as support. And we broke internal downtrending momentum, and then we broke the more macro downtrending momentum. And the posture of this descending channel right here, right, suggests the target of the top side of the channel. And we actually ended up grabbing the liquidity from these highs for a really transparent exit. Now, the entry for the long might not have been very easy, but the short was definitely like pretty transparent and easy. With the long option here, we got a couple of options. We had a SFP here. We're looking at the 15 minutes, so there might have been a better opportunity in the lower time frames. So we can take a look. Yeah, the 5 minute was good. Yeah, we got that sweep of the previous liquidity here of this low with this candle, and we closed back inside the range, confirming a swing failure pattern. That's what you look for when you're trying to find a swing failure pattern. There's a couple of different ones out there, but I like to teach the more like the more likely scenario of it actually playing out towards target. When you have this specific type of posture where price action comes down and scoops up a previous low, but then closes back inside the range like this, that's a swing failure pattern. That's extremely reliable. The only downside with this specific swing failure pattern is that this would be your primary barrier, your primary target for the SFP. And the wick is extremely like low. So having your stop loss guard on the wick, which you normally should, relative to its target, you wouldn't have very good R&R. Unless you had some kind of insider information telling you that we're going to break this and then give us a break of structure after acceptance into the valley area like this. Like you would have known that this could have evolved to be a much greater trade at this time. But there was a late entry here where we had acceptance into the valley area right here. We got the break of structure where you could have put your stop loss guard here and then targeted the local highs. And one thing that's nice about targets is that if it extends past a known barrier like the momentum, could tell you that, okay, based on the measurable base target, there's a chance that we could have a continuation because of this break of this descending channel, right? But the downside with basically trying to evolve your targets before it even happens is that those barriers could be the very same thing that tell you to get out of your trade, and that could end up giving you poor R&R. So, like, congrats to anyone who took this long. I didn't signal this or anything like that. It was a little late. It was around like 10 o'clock, 10:40 p.m. when it actually broke. But then we ended up getting to its measurable target up here. We got acceptance into the value area during this moment. We had this pullback and the higher high. The moment we get that higher high, we got proper acceptance into this value area. And then we had a double top at the value area high. For anyone who might have taken that trade, the measurable target is technically pretty like weak, but when you're in a value area and you get a double top at the value area high, we tend to get a full rotation down to the value area low, which is currently where the VWAP is. And when you deviate this far away from the VWAP, it kind of acts like a magnet to draw price back towards it. So the deviation of a VWAP is also another form of confluence that you could take in your trades. It doesn't just have to be a break past the VWAP or the VWAP being on your back. When you start to distance yourself from the VWAP, it also becomes a form of confluence as well. So what we have in the chat? Will you be averaging down your dot for the spot part? I might think about that. I'll have to take a look and see what dot's positioning looks like, because if I'm going to average my dot position in, I want to make sure I do it on a position of strength. What else could there have been here? So there wasn't anything. Yeah, just the double top, really. So now we're kind of in a situation where, like, if you're not already in a short from up here, you would be in a position where you need to prepare for longs. You're going to be waiting for longs. And because we got acceptance back inside this value area again, price action can behave the same way it did the last time we were in the value area, where these lows could act as strong levels of support, and these highs could be areas of confluence for shorts. So now that we're currently like fighting against the point of control, and we're now on the opposite side of the point of control, we should be heading down very soon to the value area low. We got a little tiny bit of demand zone here where we kind of bounced off it, but it's not too strong. But this here is also a form of demand, and it's in confluence with the VWAP and the value area low. So we might not deviate below the value area because of that, but we can prepare for potential structure to define along to target the opposite side of the value area again, where we might go range bound again, like the last time we were here. How long did we range here for? We ranged here for about 3 days and 22 hours before we deviated way out to the upside. And then we slipped through here pretty quickly. Awkwardly, but quickly. We were preparing for a long yesterday in these areas. It was roughly around here. But like none of our rules were technically met. So we didn't take the trade, even though it was awkwardly going in our favor, the way that we were kind of targeting. What we really wanted to see happen was a 15-minute change of character occurrence. So if I go to the 15-minute, right here, our change of character wouldn't have happened until way up here. And like the charts were kind of fibbing to us. So we got that break, the change of character. So like because it wasn't a break of strength, we wanted to have a pullback. And we're going to use the 3-minute time frame to determine an area for that pullback by pulling a fib from the low to the high and dissecting things on the 3-minute when we got there around here to determine if it would be safe to jump in after we got the change of character occurrence. But we later found out during the call that some of the members noticed that this high wasn't broken on a majority of exchanges. Like right now, I'm looking at the Bybit chart, and we got that high broken, give us the change of character. But when a majority of exchanges don't also have that break, then it kind of warns you that there's not going to be the same amount of trade participants thinking the same way that you're thinking. So when we got down here, we never got the 3-minute change of character occurrence to help us get that really good entry that we want to have for a full rotation to the value high. Instead, we got the continuation. So we got saved from a bad trade because we never got the confluence we need. That's why it's insanely important that you wait for your rules to be met, because even though things may be looking good in the way that you like, the posture that you kind of normally typically kind of want, I definitely would have entered long on this if we had a lower low right here. And awkwardly, we did have this lower low on another exchange, but not on the Bybit chart. It's like everyone's price aggregators are broken or something. And the liquidity is relatively unique between exchanges, but usually it's not that different where we have a lower low here and we break the high here. Especially in the Bybit chart where it's known to have the best liquidity and the best structure to like help guide you into setups. But yeah, if we had that lower low here and then we got the higher high, I would have jumped in on that trade. The only thing I've been fearful of is the VWAP, honestly. But in that scenario, in this kind of scenario, we kind of had that break. And that would have been that bad of a trade to here and here. So not getting that lower low might have actually saved us from a potential bad trade. But yeah, that's Bitcoin. So right now, it's just a waiting game for potential longs. Everyone should be, if you're in a trade right now, it should be a short or an existing long from down here. And if you're in a long from down here, if you didn't get out from this double top warning, definitely get out. If you see the value area act as resistance, you most likely will get a second chance. I can't say will, but you most likely will get a second chance to exit your longs up here if we see the change of character occurrence at this value area low. Will likely rotate back to the value area high. So that's kind of like what we're waiting for new longs around here, is that change character, target the value area high. And one thing we should note, if you zoom out on the larger time frames, like we did get that test to the downtrending momentum here from the all-time high. We grabbed a partial amount of liquidity when we came up to get that test, but we still have billions of dollars between this point and this high here. It's pretty intense how much liquidity is kind of stacked here. And by having this downtrending momentum causing undercuts in the order books, we're getting a potential squeeze event starting to occur. Well, I say potential. A squeeze event is occurring. Like we're starting to get squeezed, and we're getting squeezed against the macro value area high right here from this downtrend. And eventually we're going to get to an apex point where traders are going to be forced to make a decision, and either we're going to start liquidating people from the highs, or we're going to start having a huge drop to the downside. Now, there's one thing in the order books that I did notice that I want to kind of point out to you guys, because if we do eventually come down to this low at 98K and we get acceptance into this value area here, we're going to have a pretty devastating drop. And I can show you evidence as to why I think that might happen. So if we look at the order books for Bitcoin and you switch your decimals from 10 to 100, and what this does, for anyone who doesn't know, it basically consolidates the orders in the order book. So right now we're looking at 10. So all the orders are consolidated for every $10 increments. So here we can see there's a sell wall, for example, at $107 and $107,000 and $107,790. So whatever, yeah, yeah, lack of sleep, sorry. So here we have a sell wall. We have a large amount of people preparing for a sell here. But order books can also warn you when there's no interest as well. And if it's still like that, if we look at the 100 decimal range, we can see that there is absolutely no interest from 97.6K all the way down to like 95.5K. Now this was steeper. This was a lot bigger. This went all the way down to like 93K. So we're starting to see some buyers like start to come in. So the drop isn't as crazy, but that's almost like price action will teleport from 97.5 to 95.5 in like a single candle. So we're gonna see like a basically like a $2,000 to $3,000 candle drop if we end up losing 97.5K. There's no buyers at all in that area. It's pretty intense. But that's quite a ways away from here. A lot could happen until then. The order books might actually fill, but it'll be good for you to mark at 97.5, like right about here on your chart, that there is no orders in the order book, and basically you'll get what's a fair value gap from here to about here. So you can pretty much count on there not being any residual orders from these order blocks that you see on the hourly, and that will just like go from one side to the other really quickly. But there can be other orders, not limit. I can't remember what they're called. Market orders. Yeah, there could be market orders or trigger orders as well. But that lack of interest in limit orders is a huge warning sign as well. So that's a good point there, Coma. So if you have like trigger orders, which is kind of like a limit order, but it's entering the trade as a market order. And why traders might do that is because it kind of guarantees your position, whereas a limit order does not guarantee your position. There's a queue that you have to wait, that other orders need to be filled first before yours does. But with market orders, there's no queue. You're taking liquidity. You're not trying to contribute it. So you get hit with those taker fees. In exchange, you get a kind of like a guaranteed entry. But warning to anyone who might try to do that. I don't know if anyone in this community would be doing that, but I kind of usually advise against it. But if you were to do something like that and you jumped in on a market order and there is no other residual orders in the order books, what ends up happening is you get a stupid amount of slippage. So if you try to like buy, it will put you in the next buy ask price, basically. And so it's really important for people to look at the order books right before they enter a trade. You'll see them on the right hand side of your exchange. It look like this. There's going to be sell orders on one side, right? And then buy orders on the other. I'll just pull up the actual order books on Blowfin. So right here is your order books. See this trade right here, there's no slippage, right? Oh, now there's slippage. So about basically between like, you want to look at last traded price and like the mark price, or you can look at the order books and see like how much volume could impact your ability to be hit with slippage. So if there's only a small amount of orders at like this price, for example, and your order is large enough to fill it plus an additional order and maybe another order after that, you're going to have an average between all those orders filled. So what I'm trying to get at is basically if we come down here and we have like people jumping in with a trigger order, you could be hit with a whole bunch of slippage because there is no other orders in the order books. So I'll be super cautious doing any trigger orders. And anyone who does down there is probably going to kind of help contribute to that drop a little bit. Okay, so yeah, we're getting a little bit of a bounce at the POC. We'll probably still get that full rotation down. We have this miniature little supply concern here, where we'll likely hit our head off of this. But if we start to go range bound off of it, then it could induce inverse head and shoulders, showing us accumulation strength to bring us back up here. We don't have very much double distribution, so it might not happen. We might just come down. All right. So we've gone through Bitcoin pretty thoroughly there. Lavius, how you doing, man? Do you think the current bull run is on a downtrend now and all major moves have been made already, or perhaps going through ranges again for ages again after we hit the previous all-time high? So, like, Bitcoin has been doing something extremely unique this cycle compared to other cycles where it is going range bound after it has a sprint into all-time highs. Like you're saying, it just goes into ranges for ages. We switch over to the daily, right? And every time we see like a big run up where we create a new all-time high, we go range bound, or we basically what's happening in the background, if you really want to know what's going on in the background, is retail is selling to institutions. And we're ranging as institutions are buying at lows and around point of controls. So around these areas here, institutions are buying and retail is selling throughout the entire range consistently. And the proof of that is found in on-chain metrics. And if you go over here, we can see, for example, like people who are like holding between 10 and 100 Bitcoin have all been selling ever since Bitcoin hit its golden pocket at 46K. Just been in a massive downtrend, right? And if we look at like sharks, for example, who have 100 to 1,000, ever since that very same moment, the sharks have been buying Bitcoin like crazy. It's pretty intense, like seeing like what's going on in the background, where like basically institutions are buying up all these funds. And if you look at like the crabs and the shrimp and all that stuff, you can see that these guys have waited a little bit longer, but they've all started to sell ever since we've been around like 73K, been a bit in a downtrend. Shrimp, see what they're doing. They've been in a downtrend ever since we had that falling wedge at around 100K. And plankton, I think they're the same. So retail is all selling to institutions. Like everyone's selling to institutions right now. So they're basically taking your Bitcoin. And what's this doing to the relative unrealized profit chart is it's helping create healthy resets in the market. So these ranges are allowing new investors to come in and old investors come out, stabilizing the price. But we keep getting more and more adoption. So we're getting a higher and higher leg up. And the more we range, the higher the macro technical target is for the bull market. So if we had a candle that went straight up today with one candle, we'd probably get exhausted around like 160 to 170K. But if we go range bound again, then that target will extend, right? Because the more we range, the more this chart you'll see it go down because it's basically allowing a reset. People aren't in a crazy amount of profits. They're just in a small amount of profits. So their likelihood of selling just reduces, right? Psychologically. But when we get up here, this has helped call the top every single bull market. So when we start to get overheated again, and then the last thing you look for once this gets overheated is just a daily change character. So if you get that, for example, this was the last time we had it over the overheated zone where we had the daily change of character occurrence. So all the rules were met last time right here. And luckily we had a second chance because I didn't listen to my own rules and I sold around here. I guess I must have just recently explained this because I still have like the drawings on my chart. But yeah, I got lucky. I was able to sell. I got a second chance to sell. We had the daily change of character here. I still held a little bit longer. Then we lost momentum. And I was like, yeah, I'm getting out. So we're basically halfway through the bull market to answer your question. We're not done yet. We may have some dips along the way, right? We might have like micro bear markets, but not macro ones. Macro ones will take years. We'll be going down for a year plus to the downside. If you look at any other bear market in history, at least, I do think that this bear market is going to be unique, but it's still going to be a bear market. This one was like 428 days. We don't have all the price action on this one, but it was roughly around the same amount of time, maybe a little longer actually. Yeah, I think it was a little longer. But yeah, I hope that helps answer your question, man. But basically, I'm not telling you to FOMO in and buy or anything like that, but I am telling you that you could be patient if you want to try to like prepare to buy at these lows because we are, only halfway through the bull market. And I'm getting bull market fatigue, guys. Like I kind of want this to end soon, but it's going to take a little while. Lavius, would you say that the larger the majority of liquidity is coming from institutions, the higher the prices will get, while also increasing the trade difficulty for retail? I would say it's not the trade difficulty. I think has definitely increased, but not because of institutional involvement. Because institutions, they buy, they hold. Oh, at least a majority of them, they buy and they hold. They don't normally trade with their funds. At least a majority of them, right? The big companies are just buying to build like a Bitcoin treasury. They're just holding. ETF providers, they legally just have to hold, right? They can't play with people's money. So, um, So I would say that things have gotten difficult, but not because of institutional involvement. If anything, things have gotten if that would make things normally a little bit more easier and more stable. The swings have gotten smaller percentage wise because of all the adoption. I remember talking back when Bitcoin was around 10K, where $1,000 move used to be 10%, and now it's 1%, right? It's not even 1%. It's a little bit less than 1%. So like the percentage-based swings have gotten smaller, but I think they've gotten a little easier because of that. But what makes things harder is the news, guys. Like the news has just made things a little bit more difficult. Like keeping up with all the wars and all the Trump tweets and Elon Musk fights and stuff like that. Like that's the stuff that's been not confirming the moves. Like we know normally ahead of time that something bullish is going to happen because that's how the news works. They slap the news on the candle. So if you have a break of resistance, you'll see the news slap a good news story very shortly afterwards. And that's the market makers paying them to do that. It costs 10K. It doesn't cost very much to get your news outlets to like post and blast your stuff, your ideas everywhere. But the news definitely increased volatility for sure, and have created some whipsaw events that may have not correlated with the structure. So if we have like double top, for example, or a double bottom break, normally we get bullish news with double bottom breaks and bearish news with double top breaks. Right after the confirmation occurs, you'll feel like you live in a simulation. But that's how like people try to look up, why is the market going up? Why is the market going down? And because they know that, it gets them more clicks if you attach a bullish story onto a bullish move. It gets them more clicks if you attach a bearish story to a bearish move. It's a sad truth. And that's market makers basically paying people like CoinDesk to blast their articles everywhere. But yeah, when you have news that doesn't like correlate with the move, you'll get these whipsaw events that kind of like make things a little bit messy. That's what's made trading harder lately, in my opinion. Lavius again. Also, is the hypothetical future of Bitcoin mass adoption going to become more institutionalized than was envisioned due to this? Well, you can't control human emotion. Well, you can control human emotion, sorry. So the retail like vision of Bitcoin was for us, it's the people's money. But it can't, because it's decentralized, it can't stop centralized entities to buy, right? But when the economy is as crappy as it is, retail sometimes are forced by their hand to sell, right? So institutions that can afford to buy, but retail can't. So institutions are slowly starting to take over Bitcoin. Unfortunately, that's the evidence, at least that's been seen. And this chart is going to be the RUPL chart is extremely important for you to watch because this is going to be the time when institutions dump onto retail. You're going to notice as we get closer to this chart, the price predictions for Bitcoin getting more and more and more out of whack, and it's going to bring retail back into the space. I promise you, it'll bring retail back into the space. Especially, I'm thinking my estimated is that we're going to get that move after we break around the 1.74 level on the REP chart, where retail starts coming back into the space from some kind of bullish, crazy, throw up the mouth story that's going to make people want to buy, and then institutions are going to dump on them as soon as we get up to the overheated zone. That's what I'm expecting. You can write that down on a piece of paper that Kyle said that if you want. I can almost guarantee you that there's going to be some kind of wild news event that's going to bring retail back just so they can be used as a tool for exit liquidity for institutions that want to sell. The institutions that are allowed to sell, not stuff like BlackRock or the ETF providers. They can't sell even if, because they're holding on people's behalf basically. Kyle, on the daily time frame, we seem to be going bearish since May 23rd. I believe you're correct, if that's the right date. We technically flipped bearish ever since we had this move here, buddy, around June 6th, right? When we came down, we had this pullback. This is a healthy pullback on the daily. Then we got the higher high. This became the strong low. And then when we came down here, when we broke that strong low, it then turned the daily structure bearish. It doesn't mean you can't run up and down, but it does tell you where your strong highs are to help generate help you prepare for when weakness is going to start coming into the market. So we roughly will start getting undercut here because this is a strong high now. We come up here, we got the lower low. This became the new strong high. So at this point, this is the area where people are going to start preparing for undercuts. And that's what helps generate these downtrends that you see. Undercuts to the strong highs. So I hope that helps you out with understanding, like, the market structure for the daily, it's been bearish ever since June 6th or 5th here, June 5th. And it will stay that way until we break the strong high, which is currently right here. And then the daily will flip bullish, and then you should be focusing more on your lower time frame scalps should be mostly longs. Mine are currently mostly shorts. Mine are currently mostly shorts just because you kind of want to follow along with the macro structure to increase your win rate. But it doesn't mean you should ignore longs, but it could be a rule to help you ignore longs. Real Talk Trading says he's going to go live in about 4 hours from now. So if anyone wants to tune in, he's also a coach of InvestiShare and Finova. Smart dude, really good at market structure. On which time frame would you say the market structure is the most respected? If you're looking at higher time frames, it's obviously going to be the daily. If you're looking at lower time frames, it's like the 15-minute and the hourly. Like the 15-minute and the hourly are really respected. I use the 15-minute to dissect the hourly, and I use the 3-minute to dissect the 15. So those are my core favorite time frames: 3, 5, 15, 1 hour daily. I will dip into the 5 a little bit to dissect behavior from the 15-minute, and the 5 usually gives you really good SFPs, front runs. So like the 5 is usually my favorite when we're at extreme lows. My 15 is my favorite for confirmations like this. My My hourly is just really good for helping me to determine like where I should prepare for weakness in my trade. If we have a strong high on the hourly, I will prepare for resistance just prior to that hourly strong high, for example. Um, and the daily kind of helps me determine my macro bias. What if the reduction to interest rates, instead of a catalyst to pump our bags, becomes a sell the news event? The interest rates have been going down, but that usually actually creates bullish momentum shortly after, because interest rates. You're talking. I was thinking about funding rates. I'm sorry. Um, yeah, you're meaning like the federal funding rate fees. So reduction to interest rates will increase people's purchasing power. So I wouldn't say that would be a bearish thing, and I doubt it would be a sell the news event because it's such a macro impact over the economy. I wouldn't. We might get a pullback um, just after the news comes out, if that's what you're talking about. We might have a decent pullback, but it won't be so strong that it creates a downtrend, in my opinion. Like Bitcoin does kind of have like this inverse correlation impact over the DXY, of course, where that might strengthen the dollar if the interest rates start to go down. But it'll be, in my opinion, they'll be temporary. If they reduced interest rates right now, it'd be a huge mistake. The U.S. dollar could not. They need to like deal with their debt. Um, so I think that they shouldn't be reducing it just yet. And if they do reduce it, probably around like late like September, like around September, like by 0.25 basis points. Nothing crazy. And they should do it very slowly because of the tariffs. The tariffs will cause conflicting data to the very same tools that they use to determine whether or not they should increase or decrease interest rates. So I would think it would be very stupid for them to decrease it. I think they should keep it where it is until the tariffs dust settles, and then they can start to reassess it a few months after that, because they have really late lagging indicators to determine when they should be adjusting their stuff. They get their data month by month. So I think it'd be really unwise for them to reduce rates. That's just my opinion. Um, Real Talk Trading. What is the channel? It is Real Talk Trading. So I'll pop his name up here for you guys if you guys want to follow him. He just created his channel. So if you guys want to help support him, I think he's just at around 100 subscribers. He just created his channel recently. But yeah, it's a really smart dude. What? Okay, I've got about 15 minutes left before I got to jump on a call with the community. We're gonna be looking for trades, and it looks like, based on the positioning, we might be going for shorts now because we were hoping for that full rotation down here. We are deviating away further from the VWAP, so that will help support a short. So if we get closer to this value or high, we might have a second opportunity for a drop down here, and it would strengthen the break of this neckline to determine a stronger move down, just like how you would determine the strength of this double top, right here. Click drag, right, help bring us to the point of control. Now, if we come back up, grab liquidity preferably, and they go down. This is our neckline, and the measurable base move from here to here will be a lot stronger if the momentum were to be maintained, strong enough to potentially break through the value area low. But this will be a primary barrier concern that you have to watch out for. So you wouldn't want to trade the break of this neckline. You'd want to use this neckline as a tool to tell you to hold your trade if it breaks, right? Because trading here, unless you got to bounce, a very specific scenario of a bounce off the neckline, hit off the POC and lower low, I might trade that one because I would have the point of control acting as a guard to my stop loss, and we'd have the break of structure confluence for the continuation to target down here, and that would give you the R&R you need for a good trade for the continuation. But I would prefer if you try to front run that through structure up here, and that way, if we do have this break, it just tells you to stay in your trade to start targeting down here at the value low. But yeah, that's Bitcoin, guys. I might have time for one request. Do I trade orb? No, I don't trade orb. But I'm not saying don't because it's reliable. But no, I don't typically look for it in my confluences. Kyle, is the challenge going to be just trading Bitcoin? Most likely not. No. So like the challenge that Ramos is talking about is basically we're going to be growing a $1,000 account to $1 million. And it's probably going to take us about 500 trades, maybe a little bit less. It's going to be between 430 and 500 trades for sure. It might be a little bit less, might be a little bit more, depending on like how well we do. And that's based on like just a 60% win rate accuracy. So if we only make 60% of our trades as winners, then it would take us about 500 trades to get there. We're going to be breaking things up into pieces throughout that journey, though, because what's going to end up happening when our accounts get to around $100,000, we're going to be forced to diversify when we have hundreds of traders taking the same entries and the same stop losses. We're going to have to like start splitting our capital between other assets or liquidity pools for passive income, because we don't want to be having a whole bunch of people contributing liquidity in the exact same spots with a crazy amount of funds. So there's going to be milestones. When we get to $10,000, we're going to have one milestone. We're going to change our behavior. When we get to $100,000, that's our next milestone. We're going to start changing our trading and investing behavior because of how we're going to impact the market as a group doing stuff like that. But no, basically to answer your question, simpler, it's not just going to be Bitcoin. It's going to be whatever opportunity seems the safest, which will be a majority of those setups will be Bitcoin because it's just an asset that I've kind of like mastered over time. And if we're going to try to get ourselves to that $1 million target, we don't want it to be hard. We want it to be as easy as possible. I want to catch the SCI on its reverse point. What would that be? SCI. You mean macro reversal, or you mean just like local? What's going on right now? What are we looking at here? Oh, we're looking for something here. We had, I guess, at that time where this was drawn, we had the done. I don't want to waste your time with that. So SCI just, we got a rejection off this previous valley area here, right? Kind of positioning looks like it was unique to, it followed along with Bitcoin relatively well, except for its recovery. We lost the value area and we came down. We hit the 200-day EMA. We had a V-shaped recovery or a inverse head and shoulders behavior at that area. We generated this as a demand zone. And we had a little one here. We kind of had that Bart Simpson kind of pattern, right? Triple top kind of behavior, lost support, came back down, bounced off this demand zone, right? So whenever you guys are trading, I know I sound like a broken record, but I always got to pretend as if there's beginners watching, right? When you receive this impulse move up, base, another impulse move. You look at these zones as areas of interest, and you should box them with you can use this, and it will warn you that price action is likely going to act as support on them. So use them as like areas of very strong confluence, like very, very strong confluence, to prepare for reversals off of them. And right now, ever since that bounce, we got above the VWAP, right? Where I would be anticipating this asset to go is now this previous value area right here. So we could pull a fixed range volume profile from here to here. And you should mark your value area low because that's going to be your core barrier along the way. And this is going to be your primary resistance zone right here. And there might be confluence with that as well if we pull from this high to this low, right? Area of confluence for Fibonacci traders. So a 618 to 786 zone, like this pocket is a known zone to induce reversals. So we have confluence here. We don't have to go inside the zone, but we can hit our head off of it. You should prepare for a change of character occurrence here where price action is likely going to start coming back down. So decent amount of confluence here. I think it's going to make its run up to 2784, where you should prepare for the reversal. But if you instead get a break of structure form of acceptance, you can extend your target to the value area high. It's not a huge target extension, but it's still one that can help you hold your trade a little bit longer. So whatever kind of behavior you get, whether it be a change of character or a break of structure for a continuation, you'll have your answer to tell you should get in or you should get out. Larger time frame scale. What do I see? Macro. Okay. Well, that's the micro. So if we go to the daily, it looks a little bit more bullish for sure on the daily. We got our daily change of character occurrence ever since we create this high, because like here, actually it was here. Sorry. We got daily change of character here. So it flipped bullish ever since this moment. This being our like low. We never broke it. We're now above the 200-day and the 50-day EMA. They are trying to cross bullish again. The last time it crossed bullish was in November of 2024. It didn't really give you that crazy of a run up, but yeah, so it's trying to cross bullish. If we get this higher high on the larger time frames, then we should have a rotation as high as this extreme high at 75 cents. You should also mark downtrending points of interest like this in case that gets undercut, similar to what's going on with Bitcoin right now. So mark this downtrending point of interest, watch SEI's order books and see if there's sell orders here. We do have a daily order block here, so there could be residual sell orders. I kind of doubt it because of how long it's been, but still something you should watch because traders are still likely going to react off it, whether there be residual orders or not. But you might hit that in confluence with the downtrending momentum to drive the price back down. So around 48.32 is where I would prepare for the more macro reversal. But if we break that, hold it as support, then we can start watching the extreme highs from here and here. But this is the area of interest that I'll be watching out for initially. That's your primary concern, macro-wise, that could halt the move from going up. I hope that helps you out. Let's go back to lower time frames here, and let's switch back to Bitcoin. Now, if you give us a tweezer, it's gonna be really annoying because I want to be able to trade today. Tweezer reaction. This is an equal tweezer reaction. I haven't seen these in a long time, but they are bearish. Unless this side is green and this side is red. And it's usually down here kind of thing. So this is bearish. It's probably going to pull us back down to this area of interest here. Maybe we'll get a bounce. Or maybe this is the bounce for the continuation. Um, okay, so we had a dot request really quick. I'll grab that. Last time we looked at dot was on the 30th. We were looking at this bearish posture. We actually thought that maybe it could get up to here before getting a rejection because a lot of confluences here. A stupid amount of confluences here. We end up losing uptrending momentum. We lost this little channel here. We got the rotation back down to the value area low. We can delete that. We got if we broke this level here and it had to act as resistance, we would be targeting down here. But looks like it's trying to hold its local value area. We have like this kind of awkward right shoulder for this inverse head and shoulders behavior, right? We got the break of the right shoulder. So we got that break of structure. We got acceptance into the value area here, like proper acceptance. We got the pullback higher high within it. So now we can start pulling the fixed range volume profile to include that data. Once it wants to render, there we go. We have confluences at dot right now with the point of control and this uptrending momentum that could act as resistance. Momentum acting as resistance is not normally a strong area of confluence that I watch all the time, but you'd be surprised how often it's respected, especially when you have the confluence of a point of control like giant. This is actually a relatively strong point of control too. But if we end up escaping this volume shelf, which is where this high is right now, we'd have a fast move to the next volume node. We have this huge volume gap. Well, not huge. We have a volume gap here where price action moves quickly between it. So we should have like that a burst potentially right to the point of control after we get above this high right here. But this will initially act as resistance. So just prepare. I would mark this as local resistance, just in case it prevents the trade from being able to extend to the point of control if you're in an existing trade. But yeah, if we break past that point control, we'll have that full rotation to the value high, and then just prepare to trade the range again. It's got relative weakness against Bitcoin, like Bitcoin being at a value area high while DOT's at its value area low. So that warns you if Bitcoin does this drop, that DOT could lose this value area and then come down like we kind of like predicted before, right? And we can come down to take these lows around 310 and $3. Around these areas will be a good spot to prepare for dollar cost averaging if you are trying to hold a position of strength. Make sure you wait for the liquidity grab and the confirmed reversal through a change of character, at least on the 15-minute, and then you can jump in to start targeting this value area low as an area of concern from there. And then you can offload your seed investment from this. And then what will happen is if you offload your seed investment from this purchase around here and you already own DOT, it will reduce your average for free. It wouldn't cost you anything to reduce your average. I hope that makes sense. Like mathematically, that's kind of what happens. Your seed investment, not the full amount. Otherwise, you're just doing a trade. Keep what funds are like left in it. So if you put $1,000 in, you made 10%, and you sold that $1,000, you get to keep the 10% as part of your average. But your average of that 10% will be as if you bought the tokens for free, if that makes sense. That's kind of how I manage a losing position if I'm in a long-term losing position for like any spot banks I'm holding. All right, guys. I wish I could do more TA for you guys with your TA requests, but I got to go. You had amazing questions today, by the way, guys. Some like really intelligent questions. I'd keep at it. Governments can make it illegal to hold Bitcoin, as some have made illegal to have private wallet. Yeah, I would say that things have been turning around in the positive though. Like more and more governments are allowing adoption, and more governments are actually adopting themselves. Um, think of the United States as the country that other countries try to copy, right? Because the United States is one of the most successful countries out there. So a lot of countries, like Canada, for example, like to copy their policies and their ideas. So things have been turning around. It was more illegal back in like 2020 than it is now, basically. Like governments are now supporting it, even giving you discounts on your taxes if you hold Bitcoin or pay with your Bitcoin, right? So things are looking good. So I wouldn't be too concerned about regulation going the opposite direction right now, especially when governments themselves are the ones holding. Um, Now, when they stop holding, then they'll start manipulating you through regulation to try to get you to sell so they can buy the dip. Uh, Not a conspiracy theorist. I'm literally just saying what I've seen in the past. Um, so, all right, guys, I got to go. I'm 1 minute over. I have to go hang out with the community, try to find some trades. If price action gets up here, just a quick recap, we prepare for shorts again, right? If we come down here, we prepare for longs again. If we have that unique scenario of a retest off the low and we hit our head at the point of control and get that break of structure, that could also be a potential continuation trade or a short to this area if you don't manage to catch the top up here. This is the higher risk scenario. This is the lower risk scenario. So try to focus on getting into the lower risk side of the fence and just try to use this neckline as your area of interest to tell you that we're going to get the continuation. We did just get a tweezer, which is pretty damn bearish. So we could at least get to here again. All right, guys. You have a great day. Thanks for everyone who's been watching. Please like and subscribe. It helps a lot, like a lot. And we've been growing like pretty well. Like we got 120 subscribers this month. I'm gonna try to aim for 400 this new month that we're going into July. That's my goal, is to try to get to 7,000 subscribers. So it'd be amazing if you guys were to help me out. You have yourself an amazing day. Try to share to people who are interested in learning and who are struggling with trading, because like that's kind of what I'm here for. I like to answer questions to help people figure this stuff out, so they're not alone in this kind of journey. Because trading is usually a kind of a lonely journey. There's not very many people that are interested in this kind of stuff. So, yeah. All right, cool, guys. I'll see you guys in the next one. I'll be live tomorrow at the same time at 8:30. Okay, but I won't be as time restrained. I'll be able to stay a little bit longer. All right, see you guys. Have a great day, and thanks for watching.